Welcome to the Swing Trading with Cycles channel. It is January 12th, 2023, CPI day. We're going to cover the broader markets today. We're going to talk about the DXY first, the US dollar index, because it's important to make sure that you understand that. If you're new to this channel, I'll give you the short version. We focus on trend analysis on this channel, not about fundamentals, not trying to predict the future. The edge is in understanding what direction prices are trending and then positioning ourselves so that we're on the right side of that trend. That's all the prices can do, right? They can either trend up, they could trend down, or they can move sideways in some kind of range. And the reason that a price is trending is less important to us because realistically, it's hard for us to ever know truly exactly what's moving the market, but we can, with great precision, identify if there is a trend, how strong that trend is, and what are the sort of low risk points to enter and exit. Now, the US dollar index is important because generally as that goes lower, risk assets do better. And this thing peaked in September 2022. Now, if you've been watching videos on this channel, you've known that for months now. We've been talking about that. And I've also been posting on Twitter. If you're not following on Twitter, definitely take a look for a link in the description. And I'll also have a pinned comment that has a bunch of background info for you around cycles analysis. There's nothing mystical about cycles analysis. It's just trend analysis, right? So this long-term cycle for the dollar, and I'll have a separate video on it, so I'm not going to go into too much detail. But you can see these long cycles for the dollar. That was a 32-month rise, right? That was a 25-month rise to this top, right? That's what the numbers mean, right? And this just most recent rally was 20 months. What happens after a rise? Well, after every rise, there's a decline. That's what happens, right? You have a rise, and then you have a decline, right? That's what the cycle is. And so our thinking, and it has been for a few months now, we've been talking about this, as I said, is that the advancing phase, the rise, is over for the DXY in this long cycle. The same way it was over after month 25 here or after month 32 here. And this goes all the way back, right? This one only lasted 11 months. This one only lasted 12 months, right? And so, I mean, in this case, you had the one that was like really short at just 6 months. And then we just cascaded lower. And so and the way we identify that is by identifying a swing high. And there's a video in the pinned comment to get more detail on that. And so I bring this up because this becomes a tailwind for risk assets. As I said, the CPI was released today. The market is having a bullish reaction to it. Obviously, this move can get reversed tomorrow. We'll have to see as people digest the move a little bit more. But this thing, the DXY, is in a long-term downtrend. It's in a downtrend on the quarterly chart. This is your monthly chart. But if I flip it to the quarterly chart, you can see we're making lower lows, right? This last quarter closed below the low of the previous quarter, and we're now below the low of Q4 2022. All bad news for DXY, but good news for risk assets. So let's walk through those. So let's look at the S&P 500 first, and then we're going to look at IWM. We're going to look at QQQ, and then we're going to look at the Dow. I think that's actually the way to play this. That thing looks like it's going back to all-time highs very soon. And so, as we talked about in our previous video around the broader market, we have been in this range, this ugly, disgusting, consolidating sideways range for a long time. And the longer that you're in a range, the longer the breakout lasts, right? And it would seem, right, at this point, we've broken out to the upside. Now, we had this day where we made a new high, a significant new high, and then came failing down. And I'll tell you in real time, that was incredibly bearish. The expectation was that you would get the next day a candle like that, right? That would kind of finish the job, that this would become a bearish outside candle of this. That is not what we got. We got the exact opposite of that, right? And that's why I say you can't predict what price movements are going to do. All you can do is react to them. And if you're looking on multiple time frames, you can anticipate some moves. And so we got this crazy reversal off of this bearish candle. Must have caught a lot of people off guard. And now it's day 13. This is our reaction to the CPI print. This is obviously a doji candle, so not super bullish on its face. Also, though, notice that This is your 200-day moving average. The yellow line on all my charts are always a 200-day or always a 200-period moving average, and this blue line is a 10-period moving average. And as I said in the previous video, the bearish thing about this is that we wasted a lot of time chopping around like this, right? Because we're already on day 13 of the cycle, and we've seen, we've had cycles that topped out on like day 4, but we also had a cycle that just ended that topped out on day 42, right? Before that, we had a cycle that topped out on day 40, but you also had one that topped out on day 14. All that to say, we're certainly not early in the daily cycle. No one could argue that 13 trading days into the move that this is early, but we're not super late either. And so I could see us at least come back and try to test this level, right? So getting close to 4,100. But again, I think the Dow is actually the way to play this. The ticker symbol for that ETF is DIA. That's how I'm playing it. And if you look at the weekly, this is probably the most pernicious thing of all. Man, I tweeted about this in real time. Look at how bearish this candle is. Now, this move isn't over, so there's no reason why this couldn't end with a lower high. But the expectation once you saw that bearish outside candle was something like this, right? The start of a downtrend, right? And we could still get some version of that, but this move right here makes this a higher low, right? It's a higher low than this one, right? So this would be day 13, and just like we're on that daily chart, the expectation is we go test that level. That's that same level on this weekly chart. Now, it's entirely possible, and just if you can see, this is the trend, right? This is how we've trended so far. It's entirely possible that price is going to do something like that, right? And we will have a downtrend, right? But right now, especially looking at the daily cycle, the odds have shifted, right? To maybe we get another up week next week, right? And then we go and again test that upper end of the consolidation range, right? Like that. And so this is the odds have definitely shifted bullish that we're going to make a new weekly cycle high, even if it does become bearish. Like imagine if we get a new weekly cycle high next week on week 14 and then we kind of roll over. This is complex stuff, right? We could do that and it would still be a lower high to this and that, right? But what you have at stake here is potentially an end to the bear market itself. And if you look at the S&P, it's so important to know your levels. We are still an inside month, as we mentioned in the previous video. The range from December was a high of $4,196. So that's why you could easily see us at least make our way towards that 4,100 level, even if we don't get exactly to it, to try to make a new high on the monthly chart, because that's what we would need to do to establish a bottom. That's how that's how it works, right? Look, notice we've been in a downtrend on this monthly chart, right? I'm just drawing the downtrend for you so it's clear, right? You see these series of lower lows and lower highs. So this was setting up to be another lower high, right? But instead, what if we do something like that, right? And the bear market is over, right? That would, again, the first step to doing something like that is making a high above this candle, the December candle, the previous candle. And that's going to be an equivalent level that we're going to watch on all of the indices. So speaking of that, let's go to the Qs. What's the level on the Qs? So for the Qs, that high is 296.88. For IWM, and IWM is looking pretty nice too, and we'll talk about that really quickly. That high for IWM is 189, and for DIA, which represents the Dow, as I said, that high is 348. And you can see, as I talked about in the previous video, the Dow has always been the index that's close, that is the strongest in terms of its structure, and that has the most likelihood that it actually already bottomed back in October. And this would obviously really strengthen that case if we can get above the high from December. And really, because just to be clear, what this is doing is starting an uptrend on the monthly chart. Do you see that? That becomes a high. This becomes a higher low. We make another higher high. At some point, we make a higher low, and we continue, right? Like that's the kind of idea. So I think the Dow is actually the lowest risk way to play this, and the charts are pretty much identical. You can see for the Dow, We are, yeah, it's the same thing. We are on week 13, trying to get to past this big bearish candle, which is also the high for December. Same count on the daily, day 13. Let's look at QQQ, and then we'll close out with IWM, because I think that one is actually a little bit interesting as well. So the Qs are on day 10, whereas most other things are on day 13. It's also on week 13, and you can see the Qs are much further away from making that new high, but they probably get dragged up with everything else. And IWM, right? So that is on day 10. Look how vertical this thing has gone. So this IWM is starting to outperform its peers. And I'll show you what I mean by that is, let's look at a simple ratio chart of IWM compared versus SPY. Great way of using TradingView. You can just literally plug in two tickers. So we were just looking at the absolute chart, but this is your relative chart for IWM relative to the S&P. And notice what we have here, a big up week, right? So we know all the indices are having a nice up week. But again, this is the ratio of IWM to SPY. So it means even with all the indices doing well this week, IWM is actually doing better than the S&P. And you could see like the bottom was this, right? And we had these three pretty feeble candles. So this is maybe the start of a bigger move in terms of IWM's relative performance to SPY, right? And you can see it's below the 200-week moving average, right? And so we probably go up and kind of test that. And so that's why I'm also long. And you can see this is a something of a consolidation. Like price hasn't, or I should say, we haven't been able to get past this kind of zone. Again, this is just a sense of, is it better to put money in IWM versus SPY? Like which is outperforming which? And you can see SPY has been outperforming IWM for a really long time. This is a pronounced downtrend. It's very clear, right? Like we made this low, lower high, low, lower high, low, lower high. But now but for the last several really year or two, we've kind of bounced around, and now this may be our breakout point. So that's going to be something worth watching, and we'll definitely continue to talk about that on this channel as well. But we'll leave it at that for this update on the broader markets, attempting a breakout here. And again, this is going to catch a lot of people off sides because there are a lot of reasons to be bearish.